a Wednesday, and Marcus is sitting in his car in the driveway of his own house. He's been sitting here for 6 minutes. The engine is off, the garage door is open, and he could pull in any time. But he's not pulling in yet because he just checked the credit card app while he was waiting at the light, and the number was $14,200, and he's trying to decide how he feels about that before he goes inside and has to feel something else instead. He makes $88,000 a year. He's never missed a payment. He pays more than the minimum, usually. The $14,200 didn't happen in a single disaster. It happened in $60 increments. A dinner here, a flight there, a car repair in March that he put on the card because he was waiting on reimbursement that took longer than he expected. The reimbursement came. He paid other things with it. He doesn't talk about the number. Not with his wife, she knows it's there, but not the exact amount. Not with his friends, 2 of them are carrying more. One of them is carrying less, he's pretty sure. But nobody's confirmed it. The number just lives in his phone and in his chest, and in the 6 minutes he spends sitting in the driveway before he pulls in. Here's what Marcus doesn't know. $14,200 in credit card debt puts him almost exactly at the national median for cardholders. He is not behind. He is not ahead. He is the middle of America sitting in a driveway at 11:43 at night, trying to figure out if he's the problem or if the number is. My name is Nick, and today we're walking every level of debt from $0 to $500,000. What it feels like in your body, what it's actually costing you in time and not just money, and where the line is between debt that's working for you and debt that quietly owns you. Pull up whatever number you're carrying. We're going to find out exactly what it means. Level 0, no debt. Let's start at the beginning, which is also where most people assume the story ends happily. You have no debt, no credit card balance, no car payment, no student loans, no mortgage. The number is 0, and 0 feels like winning. Here's the thing about 0. About 23% of American adults carry no consumer debt at all. And inside that group, there are 2 very different people sitting next to each other. And from the outside, they look identical. The first person is 58. She paid off her mortgage 2 years ago. Her car is owned outright. She's been debt-free for a decade, and it's the result of decades of compounding decisions that went right. Her 0 is a destination. The second person is 29. He's never had a credit card because they scare him. He rents. He pays cash for everything. He has $1,100 in a savings account and no investments. His 0 is not a destination. It's a starting point he's been standing on for 4 years without moving. 0 debt and 0 credit history at 29 is not financial safety. It is financial invisibility. When he tries to rent a better apartment next year, he'll be denied. When he needs a car loan, he'll pay 3 to 4 points higher than someone with an 8-year credit history. When he eventually tries to get a mortgage, he'll spend 6 months proving he exists to a system that rewards managed debt and has no category for someone who avoided it entirely. The absence of debt is not automatically the presence of financial health. 0 is just a number. What matters is what you built while you were at it. Level 1, $1,000 to $5,000. You're 27. You have $3,400 on a credit card. It's been there for about 8 months, give or take. It started as $1,800 from a flight and a hotel for a wedding you were in out of state. Then some work clothes you needed before the interview. Then the vet bill, which you genuinely didn't plan for, and there was no other option. This is the tier most people would describe as fine. It is not fine. At the national average interest rate of 21.5%, your $3,400 is generating $61 in interest every single month. Not $61 a year, $61 a month, silently, while you sleep, whether you buy anything else or not. That's $732 a year to carry a balance you could theoretically pay off in 5 months if you stopped spending $180 a week on things that don't matter. But here's the trap nobody names at this tier. The minimum payment on $3,400 at 21.5% is around $85 a month. If you only make the minimum payment, you will be paying on this debt for 13 years, and you will pay $2,600 in interest on top of the original $3,400. Total cost of that wedding, those work clothes, and that vet bill, $6,000 and 13 years of your life. That is not fine. That's $61 a month quietly eating your future while you tell yourself you're handling it. The $1,000 to $5,000 tier is where bad debt habits become invisible. The payments are small enough to absorb without real pain. The balance is large enough to never quite disappear. And the interest rate is high enough to ensure that if you're only making minimum payments, you are running on a treadmill at a slight incline that will not stop until you actually stop it. About 35% of Americans with credit cards are carrying a balance in this range right now. Most of them have been carrying a balance in this range for more than 2 years. Most of them describe themselves as doing okay with money. They are doing okay. They are also losing $600 to $800 a year to a bank for the privilege of doing okay. Level 2, $10,000 to $25,000. Marcus in the driveway. This is his tier, $14,200. At 21.5%, Marcus is paying $255 a month in interest before he touches a single dollar of principal. That's $3,060 a year. That is a vacation. That is 4 months of maxed out IRA contributions. That is $3,060 a year. That is not building anything. It is the price Marcus pays every year to keep the lights on a balance he keeps meaning to address. Here's what the $10,000 to $25,000 tier does to your brain. At $3,000, the debt feels payable. At $25,000, it starts to feel like a feature of your life rather than a problem inside it. The payments are manageable. You've structured your budget around them. The debt isn't a crisis. It's a monthly line item, like rent or the phone bill. And that reframe is exactly how it becomes permanent. The Federal Reserve's most recent data shows the average credit card balance for households carrying any balance at all is now $10,479. Median credit card debt for households in their 30s and 40s sits right in this range. This is normal. Normal is also, mathematically, costing the average household between $2,000 and $5,000 a year in pure interest, which is money that will never come back and never grow and never compound. Let me translate that into time. If you earn $88,000 a year like Marcus and you're in the 22% federal tax bracket, your actual take-home per hour worked is somewhere around $33. Your $3,060 annual interest payment costs you roughly 93 hours of your life every single year just to maintain the balance, not to pace it down, not to make progress, just to stay where you are. That's 2.5 weeks of your life every year handed to a bank. And at this tier, most people will do it for a decade or more without ever naming that trade explicitly. Level 3, $50,000. There are 2 different people at $50,000 in debt, and they are having completely different experiences. The first one is 26. She graduated with $49,000